Hello and welcome. It is the week ending September 22nd, 2016. I'm going to show gold on three different time frames in the Canadian currencies from three key points. First, from the key lows from the end of last year, which occurred a little over 200 trading days ago, right before this chart, thus the lows at 1402. So this two-day chart is a nice chart in the sense that it gives good probability risk reward for a bullish play. You have a up move with easy higher highs, higher lows that are noticeable. The correction was large as far as the time that it took. First a price down, then going sideways, the leg higher just up to this point, and now it's been supporting this previous resistance level. And the correction that it's had from this point down to just a few periods ago is not as deep as it should be, as this support level should have been tested and it wasn't. And now it's looking as if a break of the 1789 mark is going to probably give about a 5-6% gains, where to, well, that would be to its all-time highs of 1886. It's 6.29% away from it now, therefore pretty much at that. And there has been a lot of violent moves, to say the least. I'll use that violent for a lack of better terms, as far as massive up and down moves since the 2013 bottom. Violent move up and down, and then all the way through until this year, where it's changing just a little bit. The correction seen in here, not quite as big as the previous four others. And this rally, not as large as the previous ones as well. As you look at the higher highs, well, this one technically higher, but as far as percentage gain, nowhere near as large, but still a higher high. But this correction has been not much for price and going sideways. When you see that move breaking 1789 that was shown in the previous chart, we are looking to go to a move up to the previous high as the most, not logical, probable, yes, most probable outcome. Then most probable, again, you're going to resist this area and have some sort of retracement. Furthermore, I used before the lows from here, which were the US lows, but not the Canadian lows. It was the third higher high on the Canadian side. A lot of this, of course, done within the currency movements, and been regaining an uptrend since 2014. But most people look at the US charts and they don't see it, but almost every currency has gold in much nicer uptrends. Let's take a look at this now from the 2008 crisis period, and looking at the first many periods. This candle here just was a dead giveaway for a nice up move. When you look at a big green candle after this sell-off, big red candle down, big green candle up. Just when you look at like 8, 9, 10, 11 candles together, those are the types of things to give for moves higher. But anyway, as far as this chart's concerned, using the key lows from the 2008 period, it has been retracing very nicely the first key Fibonacci mark and a very long sideways retracement. So the first move was from about 800 up to about 1900. That's a gain of well over double. So after a significant move, you have low, high, low. What would the next high be when you're looking at it from this time frame? And I've got to go better than double from the low we're at now at 1200 and change. So we're looking at, well, 2500's double. So doing better would be around 3000 as one of the next key targets. And last time it took several years. It could take several years again. With what's been going on as far as the fundamentals of how the world is, it could be short, it could be long term or a long time. Very hard to tell, but that's what the message of the market is stating. Of course, you want it to get above the high to really go aggressive towards that sell target, and this trend line, something to look for as key support. Thank you for tuning in, and have yourself a great day. Bye-bye.